Alright, hey, what's up, y'all? Money Professor 2 Rust here. It's been a minute. Happy 2021. So, I'm getting back in. Actually, I was getting into options trading heavily when I left and focused on other projects. And then I got finally into Forex. And so I just wanted to show you quickly what I was doing with Forex. Um, so here's Forex. And in a nutshell, it's going down. So I correctly predicted and played this drop here, which was for about 150, almost two. Well, no wait, 250 pips, so that was fun. And then I noticed this this second channel in between, this like minor channel in between the major channel, and I tried to hit it here, and it made some money, and then it came back up, and then I placed it again here, and then played it here when it fell all the way down. And this is beautiful because I had drawn this line before it actually hit here. I drew this line over here, and so it came down and hit this perfectly a few days ago. And this was a breaking point. I knew the euro was going to fall through. I knew it wanted to. It took a couple of days here, and now it's falling through, so I've been playing that. Forex is not for the faint of heart, but it actually does follow technical analysis better than stocks. And I think it's just because so many people are playing it, you can't go against the true nature. However, there's lots of fake outs, lots of fakes that happen here, and you have to know what you're doing. But I was coming here instead to talk about Zoom. I was watching some random thing, I think by Jeff Brown and or so, and he was talking about Zoom going down, and everyone's talking about going down, and so I put some up on my Instagram, and some folks were interested, so I thought I'd do a little tutorial here on Zoom and trading it tomorrow. So as with everything you do, you start always from the core, right? If you're a basketball player, you don't just jump on the court and try a slam dunk or something, some trick shot, right? What do? You shoot free throws, you warm up. So warm up and trading is about getting into the zone. What you got to understand about trading is you have to be in the zone. It's like surfing. And so the warm up, and what also helps you get in the zone, is to always look at the Dow Jones. So this is our Dow Jones. This is COVID. And this is this crazy rebound from COVID. Of course, like COVID was solved apparently, and the world is fine. Of course, we know that's not true, but this is in fact what happened. So it went down, shot up, formed a little congestion, a little flag, and then shot up again. This looks like it was going to fall, right? But just because it forms a downward triangle doesn't mean it's going to fall. It is an indicator for falling, but it could also be a retracement or a bounce back or a fake or whatever you call it. So this one shot up again, did some. I like this pattern. This isn't a flag. This is energy, right? This thing is shooting down, pushing up, shooting down. This is telling you that there's energy. This is not complacency. This is not a rectangle of indecision. This is like something crazy is going to happen, and we don't know where it's going to go. And sure enough, it shot up. And so this was definitely a buy signal, which would have taken you into 2021. And you see this rising channel that's kind of broad, right, as it's rising. I'll come over here. Maybe you can see a little better. Maybe not. But this is a rising channel that is broadening, and this also shows the kind of mania of it. It's going up, and then it's swinging down farther than it should, and then it's going up, higher than it should, and so on. And this is where we are right now. It just popped over this channel, retraced, to where the channel started, and then popped up again. But if you zoom in here, you'll notice is that this second pop was basically what we call in the business a double top, right? Now, double tops are usually meant for, macro trends over years or months of time. This is in days, but it still works. It popped up, completely rejected, had some indecision, didn't know what to do. This is a fake, this is like something going on. What's going on here? And then who knows, Biden might have said something, someone said something, it shot up again, sure. But look, it hit it and rejected again. Not as strongly as before, but it did reject it. And now it's forming this, kind of downward triangle. And it's zoomed in over here. and you can see that on the daily, I'm going to zoom in on here. I think it's better. You can see that this is a pattern that shot up, retraced back all the way back to the initial kind of gapping up, if you will. Tried to rise again. And look at these wicks. You know, it's like tries to go down and it fell a lot, right? Tries to go up, barely moves. Tries to go up, fell down, right? Tries to. These are wicks that are bullish, you know, sure, but it also talks about like there's some indecision. They don't look like this, where it's just all the same color and hardly any wick. When you see lots of wicks, then that tells you there's some issues. And then look what happened, right? In the last few hours, it really kind of tanked. So to me, this is a bearish opening on Wednesday. I would predict that this should fall. Now, what's interesting is that if it doesn't fall, it has a chance of really shooting for the stars, right? But I mean, this would have to rise a lot. This would have to, you know, if it just rises 1,000 points and falls again, now we're in a rectangle. That's indecision. So this thing would have to rise up. You know, the Dow Jones would have to be going up. Sorry, not 1,000 points, hundreds of points up, and then break through. It's gotta go up with a vengeance, right? And if it doesn't go up with a vengeance, it's gonna fall. And you know, so the question is this a meteoric rise and a flag, and it's gonna meteorically rise again, or, and what I think is gonna happen is that it's just gonna kind of peter out and maybe fall. So I am bearish for tomorrow, and I think it's going to fall in general, you know, back down to one of these levels, but there is a chance that it could rise up. So now that we understand the overall market, and you got to understand about trading stocks is that they always follow the Dow Jones. So if the Dow Jones shoots up tomorrow, you can bet every stock is going to shoot up tomorrow. Even though the Dow Jones is only composed of 30 stocks, those 30 stocks literally tell the other 6,000 stocks what to do if there's huge movement. So you always want to trade a stock that looks like the Dow Jones, so that when the Dow moves, it will also move, right? And any weird, you know, AI computer people faking it out, this and that, it won't affect it. You want a heavily traded stock if you're going to trade options, and you want something that looks like the Dow Jones. So something that looks like it's a downward triangle on the brink of falling, right? At least a little bit. So let's take a look. You can see over here that these were the ones I've been looking at several months ago. But Zoom, let's take a look at Zoom. Let's just jump right to it. This is Zoom. So here we go, right? The company just shot up, and yes, of course, everyone's using it, but that doesn't mean that the revenues are going up, right? It's not like Tesla, you know, selling more cars or this or that, or iPhone. I mean, what product has Zoom come out with in the last 6 months or a year or anything? Nothing, right? It's just people are attracted to it, but it's completely overvalued, and now we're seeing it falling, and it kind of looks like that downward triangle, right? So this is good news, and furthermore, it already kind of retraced its little gap up here, down here. So this is all kinds of going down. Now the only issue is that my exponential moving average is right on it, which means that, you know, if it falls, it's really got to fall. But I don't like seeing, I would have liked to have seen the exponential moving, like here would have been a great time to short. At this point, is it going to fall that much? You know, maybe not. It may not fall down 50 points or 100 points or so. But remember, we're trading options. The thing only has to move 10% for you to make 300%. This thing moves 30 points tomorrow, and you can make 300% on this, right? So that's kind of what we're looking at. So the setup, but at the same time, this is a downward triangle. So if it does shoot up, man, it really could, right? There's not a lot of resistance here. It could just shoot up and just go all the way up to 600, 700, 800. And of course, doubling your money if you're, you know, trading an option at 20 or 30 times leverage, man, now you're making thousands of percents. So how do we trade it? Well, we know that this is going down, and so we can, you know, use some tools here. This is the level that we're looking at. And then we also want to have the downward trend, so that's can be shown this way. So that's kind of where we're at. All right, well now let's zoom in a little bit over at the 30-minute mark here. So if we zoom in here, there we go. See, we see our downward trend, and so it does have room to rise. It totally could rise, but it's on the brink of falling, on the brink of falling. And this is beautiful because whenever you get into a trade, you need to know when to get out of the trade, and this will be very easy for us to get out. So notice how I was at my daily, and now I'm at my 30 minutes. So well, the 1 minute's too small. I'm going to choose a 5 minute here to look at this a little better, to figure out our entry points and whatnot. So this is where we're at. This thing has been oscillating back and forth. So let's do the buy first, even though it's not what I want. If we think this thing's going to shoot up, at what point does it look like it's actually going to shoot up, right? So how far would it have to rise tomorrow for me to feel comfortable buying it? And to be honest, I don't. I really don't. But this looks interesting. If we kind of zoom in here, whoops. Right here, this looks kind of interesting. See how it went down and then just gapped up out of nowhere here? So that's the good pattern. And if you kind of, it technically dripped down to here, and see how we have some resistance here and some resistance here. It falls down, but there's resistance all along this line. So to me, that's a nice indicator. So I would say if it starts shooting through the moon at 320, that's a good buy. Now, if you're going to buy here, we'll put this in white. If we're going to buy here, we have to know when to get out if it goes down. Now, if you've seen any of my other videos, you'll know that I use the stock charts to determine my entry and exit points, but then I use options to actually buy it. So I'm not looking at the options charts. I'm looking at the stock chart, but I'm just leveraging by buying the option. So I kind of go to another screen and say buy, to buy the option. I'm not going to do that here. But I will always, I'm a purist. I always look at the stock chart to do everything. So where would be a time when we make a mistake? Let's say this thing shoots up and then tanks. At what point do we realize, you know what, we actually probably made a mistake? Well, if it falls to here, right, if it comes up and falls down to here, who knows, right? If it falls down to here, maybe, right? But, I mean, definitely if it falls down to here, then that's a mistake, right? If this thing shoots up and then falls all the way down to here, probably not. It could shoot up, fall down to here or here, and then shoot up some more. So I would say somewhere in this realm, right? Well, isn't that kind of close to where we'd want to get in if we were going to short it? Right? So let's look at the shorting side before I choose, because I'm going to show you something kind of funny here. If we zoom back out and we look and see, well, where's action happening? There's some, it has a low point around here, right in there. So if I zoom in here, that low point is pretty much right at 310. You know what I mean? So we've got this nice little spot right now, and that's why I was just saying, hey, let me show you how to trade this thing, where if it shoots up to 320 and then falls back down to like 310, look at all that resistance it's got to go through, right? It's got to go through all of this congestion, all the way down here. Now, I wouldn't necessarily stop out here. It's a judgment. Definitely, I would stop out if it fell down to here. So what is that? It went from 320 down to, let's say 300. So a 20-point drop. Well, or let's say 305. So because that's around a nice easy number to understand. So 15 out of 320, or 15 out of 300 is 5%. That is a pretty large stop. I like my stops to be more like 1 or 2%. So I would say if I got in here, I would want to stop out if it fell maybe only down to 315. So let's try that. So that would be a 5-point drop out of 300. Now we're at 1.6%. So this is why it's a hard play, right? And honestly, you would probably want to get in at 315 and then stop out at 310. And that's why I don't like this play too much. But if we were to buy, I would say you would have to let it fall to 310 or 305, and that opens you up to a 5% loss. Now remember, 5%, right? It's not times 30, but it would be a big loss, right? You wouldn't lose 150%, but you would lose a lot if the thing fell, and that's just why I'm not really anxious to buy this Zoom, and I would be cautious about it. But if it just starts shooting up gradually and moving up, then maybe I would buy it and just watch it, for it to retrace suddenly. Uh, so that's the buy signal. Well, let's look at the short signal. Where would it have to fall for me to short? Now, this is a stock I want to short, right? I want to open up shorting this stock. Right on the get-go, I'll open up and have my extended hours trading here, looking to see what's going on in between the hours. And man, if it looks right, as soon as that stock opens, I'm going to short it because I think it could fall a lot in the opening in hours, and everyone knows the first 5 minutes, 10, 15 minutes is when all the stocks move, right? And after about an hour and a half, that's it. Then everyone, I don't know what they do, go to lunch or whatever, and the trading kind of dies down. So I'm looking to short this as soon as it opens. And so I would say, man, short it if it hits 310. Like, take the risk, right? Because why? Well, let's zoom in more here. If this is in fact shorting, then we would expect this thing to fall, right? We would not expect it to continue this rectangle. See how what it did on Tuesday? It kind of popped up and hit this and went down. Didn't go up as much. Looked like it was going to fall. Oh, it went up. But then it kind of hit this double top, right? Just like the Dow, and then it just fell again. If this thing goes down and hits up again, right, there's no real triple top. That's now saying indecision. And if there's indecision, then that means that this thing may not fall, right? Who knows what it's going to do? But everyone is seeing that this thing should fall. And if it's kind of oscillating here, then that's sketchy. So I would feel very comfortable putting a real tight stop here at 315. So I would say get in at 310, and then if you stop out at 315, then hey, that's cool. You can always get in again if it looks like it's serious going down. All right. Now let's assume that you did get in the morning and it shorts and it starts falling. Where do you get out? Well, that's where you got to look over here and look at this kind of congestion. So if we come over here and see, this congestion happens right around 280. Right? There's some hitting by 280. So again, if we short at 310 and it falls to 280, what is it? That's a 30-point fall. 30-point fall out of 300, right, is a 10% gain, right? 1% loss versus a 10% gain, right? You only got to be right 10% of the time, and you'll make money with this kind of strategy. You know what I'm saying? So, or 2% loss, 10% gain, you only have to be right 20% of the time. We should be right much more than that. So that's great, man. If it falls 10% and your leverage times 20, times 25, maybe times 30, now you're looking at 200 to 300%, right? Of course, you aren't going to get that, but you'll get a huge win, maybe 70, 80% or so. And that's what you're looking for, right? On an options trade is somewhere above 50% on your trades. That would be great because your losses are also going to be 10, 20, 30%. So you're aiming for hundreds of percent, but you're happy if you can get 50%. Okay, so if this thing falls, once it hits around 280, that's when I would suggest possibly looking to get out. So if it just crashes through, awesome, but there's a lot of resistance here, right? 280, 260, 240. It would have to fall below 240 before it stops having resistance. This whole box here creates resistance. So if I put like a marker, if I put some channels here for us, then they will appear as we're trading, and we could see that if the thing falls, then this is where we're looking to possibly take our profits. So again, if you're playing with a lot of money, then I would get in, go all in, go for it. But once it hits here, I would take half your profits and then just let the rest ride, right? And when it hits here, I'd probably take all your profits out, or at least a lot of it out. That's it. If you want to be scared, then put in a little bit of money, and once it reaches 280, maybe put in some more. But I don't suggest that, or maybe put in ladder some more money in as it's going down. I don't suggest that. I say go big in the beginning, have a hard stop to get out if you're wrong, and that way, shoot, you can ladder out if you need to. Just seems to be working better with these. So that's it, my friends. So the last thing you got to understand is the after hours trading. After hours trading is real. Whatever happens in after hours trading, extended hours trading, is going to affect it. So most likely, this stock may fall a ton in after hours. And so if it falls, you got to determine, is that going to mess up my play, right? If it falls all the way down to 300, then bounces all the way back up, what does that mean, right? If it shoots up to 320 and then opens at 320, what does that mean? You know, so you got to watch it. My thinking is that this stock will fall and already be down here, and so it'll do a little bit of a retracement in the morning. So if it kind of falls down, you're hoping that it curls up before the market opens. If it curls up before the market opens, then guess what? The low of that fall is where you want to look about getting in. Now, you don't want to get in at the low, but as soon as, let's say it fell in the aftermarket and it's kind of curling up, and then it opens and the market kind of comes here and it starts falling, that's when you get in, right? You get in, you put a stop right above it, and you're hoping that it plows through that resistance and you're home free. If not, then you know you have a little wiggle room. You don't want to get in too late and then get stopped out because you're hemorrhaging money. All right. Conversely, if the stock is shooting up, right? Most likely it won't, but let's say it shoots up. Usually it then falls down. That's beautiful because it shoots up and then comes back down. That's a great time to enter because it'll fall down. And whatever it shoots up to, most likely it won't get higher than 320. Whatever it shoots up to, that is your stop out, right? So if it gets up to 320 and then opens up at like 315, just short it right away. And guess what? You got a 5-point stop there if it's wrong. And if you're right, then guess what? You just added some more money to your wallet because this thing will just keep falling all the way down. All right, guys, that's it. Good luck out there. Take care.